Now this is a good one because this is all about how does the loan process work, okay? We've taken a lot of time together and I thank you so much for joining me on this journey, this educational journey to get to you to where you are now. And we've gone through a lot of different steps of the process and gotten to some of the details. And so I'm going to kind of speed through now all of the different steps because we've really dived into a lot of it, but I'll slow down, I'll pump the brakes a little bit with a couple of parts where you're like, well, what does that mean exactly? We haven't talked about these acronyms or this verbiage, right? But we're going to run through kind of the whole process, okay? So I kind of have it down as about 15 steps. You could make it 7, 8 steps. You could make it 20 steps, right? I've got it at 15. And here's why it's at 15 steps, okay? Step number one is to pick a lender, okay? Once you have decided on your lender, after watching how to pick a lender, that video, and talking with, the trusted friends and family in your network, okay? Now you're going to go do an application. You may do this face-to-face at their office. You may do this online. You may do it over the phone. Whatever is easiest for you is what they should be doing for you, okay? Then you do, after the application, you're going to submit the documents, okay? And as far as submitting the documents, again, you've got the checklist. You have it right now, so you should already have all of those items ready and prepared, and all of the pages, nothing missing, and all the dates the right way, right? You're not moving money around because you guys are on this because you already know you're so good. So you're going to have all of those, but you have to get those to the lender. Again, you can bring them, hand deliver them when you go meet with them. You can scan and email them securely as long as it's a secure email. You can fax it to them, or most places, a lot of places, hopefully you're working with someone who has a secure upload. So you have like an online portal that you log into, and then you have them saved on your computer as a PDF, and you can upload that. Click a button, boom, upload, bam, go, okay? Again, when we talked about timing a minute ago in the other video, right? Have all these ready. You start working in this, at least, a few days ahead, a day ahead. I don't know how organized you are. And if you have all these things, if you're super organized, you have it all, it should be a snap, okay? But then you're going to get all the documents in one fashion or another to your lender for them to review, okay? Then they will give you a approval. Pre-approval. They're not going to pre-qualify. They're going to give you a pre-approval because they've seen all of the income and asset documents that they need to get from you to give you true pre-approval, okay? Then, guess what? Now you're officially pre-approved. You can go house shopping. Now you can shop with confidence with your agent, with your realtor, and get out there and start looking at stuff and throw an offer in right away. Okay, so you're good to go there. Now, let's say you find that beautiful home, house you've been looking for, you love it, and you get that house and you put an offer in on it. So you write up a purchase agreement with your agent. Then it gets accepted. So you come to an agreement with the negotiations. Everyone's on the same playing field as far as what you want to do, okay? And you have an accepted offer, you have an accepted contract right now. Now, that technically, folks, is when the loan process starts. It didn't really start before. That was the pre-approval process, okay? That was the review. That wasn't the loan because you didn't have a loan because you didn't have a property. Now that you have a loan, or now you have a property, and an accepted purchase agreement, now, you better hit that clock because now the time is ticking officially now. The minute you have a signed purchase agreement, a signed contract, okay? This is where some parts of the country you say you're in escrow. Now you're in escrow, which just means the process is going. We're starting to get everything done and we're moving around and the property is locked up. It's under contract and now it's go time, okay? So that's really when the loan officially starts. Within 3 business days by law, you should be getting your initial disclosures, which is your loan estimate, which is giving you an estimate. It's, again, not going to be precise, but it's a good estimate of all of the total fees and expenses that you're going to incur in getting the mortgage. And it's going to go, again, like we discussed before, the origination fee, right? The appraisal, title work, recording fees, your prepaid expenses, your maybe, credit check, your flood certification, and then I think your escrows, your prepaid sales. So most of that we covered. You're going to go through all that. That's all going to be in your loan estimate that you're going to review within, you're going to get that within 3 business days. Okay. So, and then you're going to want to, or you're going to probably have to sign that you got that you received that, and you have the initial disclosures. You've gone through everything, and you're going to proceed with the mortgage. You're going to keep moving ahead based on everything. Now, just because you see an interest rate on those disclosures, just so you know, unless your lender told you, oh, by the way, I locked you in, right? Which you should have a little say in that, but you're probably not locked in, right? So you're floating. Remember, you're floating along with that rate unless you said, hey, rates are good right now, just lock me in, let's go, okay? So you got to keep in mind where you're at with that. Then once you sign those disclosures and you say, I'm on board, right? You shouldn't, because you're doing this the right way, you shouldn't have to bring in really hardly anything else for income and asset documents, because you already did a good, great, thorough job doing that up front. But let's say you didn't. Let's say you skipped some parts of this process. Let's say you, I don't want to say half-assed it, but you kind of half-assed it. And so you still need to get some documents. So for you to get into the processing stage, really, now you need to get some of the rest of those documents. You need everything on that checklist. Okay, now you need it now. It's go time ASAP. All right. Then your lender is going to order your title and appraisal. Okay, and we'll go through exactly what is title work. Why do I need it? What's the point of it? We'll go through that with our title professional. She knows it better than anybody, so I'm going to let her talk about it. And then we're going to go through an appraisal, exactly what's appraisal, what are they looking for, any red flags, anything that you know, and we're going to go through that as well with an appraiser, right? Because that's what they do. They're the professionals. So we're going to have them talk about that. But at this point, that's when that gets ordered. You're picking out the title company you want to use and you want to work with, and the appraisal is getting ordered. You cannot pick your appraiser, okay? That is squashed in the new world of getting a mortgage these days. You cannot pick them. I can't pick them. I can't even talk to them. For real. Your loan officer can't even talk to the appraiser. So you're probably going to have a whole separate department, division, or maybe even a third-party company, most likely, that is called an AMC sometimes, an appraisal management company, that their whole job, their whole business is just to talk to the appraiser and the bank, the lender, and they're in the middle, right? So bank says this, goes to the AMC, they go to the appraiser says this, it goes to the AMC, it goes back to the lender. So the lender and the appraiser can't talk, okay? This is all the Dodd-Frank stuff. This is all the new rules and regulations. A lot of it was intended, I mean, it was all intended to protect you, the consumer, and I'm all behind protecting the consumer 100%. But just know that because of that, it adds some extra layers, it adds some extra time and complication to it. So your title and appraisal get ordered at this point, all right? Now, those are really two of the biggest parts of the process that take time. So once you order the appraisal, it's not like that man or woman is going to the house tomorrow, okay? The order has to go out. It goes to a random list of people. The one person's going to accept the order. They're going to say, yep, I'll take this job. Then they say, cool, I'll get to this job probably next Friday, maybe a week from now. All right. So then we get notified that they're going to get there a week from now, and we get notified that we won't have the appraisal back for another week. Well, why? Because it takes time to do the report, to do everything, to get it ready for you. So we might not have that appraisal back for 2 weeks. Now, can it be faster? For sure. I've seen them come back in, I've seen them come back in 4, 5, 6 days. I've seen them take 3 weeks to 4 weeks before. So this is all about what's happening in your market, the time of year. There's a lot of factors, okay? So that is kind of the next step. Title appraisal are ordered. Then from there, they're going to order your VOEs. What's a VOE? Well, VOE is a verification of employment. So they're going to contact your boss, they're going to contact HR, and they're going to say, hey, does so-and-so still work here right now? What is their title? What's their position? When did they start? What do they get paid? What is their likelihood of staying employed? That answer better be yes, right? It's kind of a buzzkill if your boss says, I don't know, I'm not really sure their likelihood of continued employment, okay? If you had overtime income or bonus income or commission income, those are the three that fall again in that category of we need 2 years history. So we're going to see what was it the last 2 years. So then, that is something that your employer is doing, okay? This middle part of the process, guys, is kind of the part where at the beginning it's a lot of scrambling. It's a lot of, hey, I need this. Can you get me this? Hey, I sent you this. What's going on? Do we want to lock in? Did you get this order? Is this ordered? It's kind of a lot back and forth. The end is kind of like, hey, all right, you're out of underwriting, and or we need this for underwriting, and we got to get this approved. You know what? We're missing one page of your bank statement. You didn't get me page 8. I need a page 8. And hey, you know what? You didn't explain to me what was this huge deposit that came in. Again, we should have caught it at the beginning, but maybe it didn't. These are things. So the beginning's kind of crazy. The end's kind of crazy. The middle can be like, what's going on? I haven't heard from anybody for like 3 days, 4 days, maybe 5 days. Now you should be hearing from your team, someone on your team, the processor, the client manager, the loan officer, the partner, someone from the team should be getting a hold of you, but you may go 4 or 5 days in the middle without hearing much. Why? All this back end stuff's happening, right? We're doing all this stuff behind the scenes that you don't know because we got everything from you up front. We don't need to bug you, right? We don't want to bug you. So we're going to let you know when we have something to bug you about or that we need from you, okay? So then the appraisal comes back, then the title work comes back. At this point, we for sure should have had everything we need from you for underwriting. The processor is basically doing what we do, but at a higher level of being really detailed and making sure that every single thing is there, every I is dotted, every T is crossed. Then it goes to the underwriter. And that is the gods who will approve your loan. So hopefully we've done a great job of your loan officer, whoever he or she is, knowing their stuff, knowing their rules, knowing their guidelines, knowing all of the things to look out for and to watch and the things that could be pitfalls, and educating you, which you already are educated, but going through that process, okay? Then you wait for underwriting to get your file, right? It's in a line, tick, 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 tick. It's in a line. It gets to that underwriter, and he or she reviews it. And in a perfect world, guys, and this happens, it doesn't happen all the time, but it happens. But in a perfect world, they go, all right, I have every single thing I need in this file, all of this huge list. I have everything. I don't have any questions because the loan officer and the processing team or processor and the borrower, that's you, you're the borrower, did such a phenomenal job of getting everything. There's no questions. And they just say, yep, bam, good to go. And if that's the case, now you are final approved. Okay, you're final approved. Then we can start lining up the actual numbers for your closing costs because now we can really narrow in on the exact day we can close and payoffs on mortgages and daily interest and all these things. And we're good to go. But again, that's in a perfect world. It doesn't always happen like that. Many, many times there's something that comes up in the underwriting process that they have a question on, because there's a lot of things to look at, folks, right? There's a ton. So there's something that was missed. There's a question about what is this withdrawal on your pay stub? What was this large deposit in your bank statement? Your verification of employment came back that you only made $5,000 for your bonus, but you told us you made 10. Your overtime, your boss says it's an average of this, but there's so many things that could come up. So then it might be conditionally approved, which means we're conditionally approved. We can give you a loan commitment that says we're going to do this mortgage, but I still need A and B and C, or maybe A, B, C, D. And I've seen it A, B, C, D, E, F, and G because there's a ton of stuff. I need your divorce decree. I need to just prove who's paying which bills because you're divorced. I need to see your bankruptcy discharge papers because you had a bankruptcy. I need to see proof of your child support that you're going to get it for at least 3 years. I know you get child support, but we have to prove you're going to get it at least 3 years or longer. So these things come up when you're conditionally approved, and then you kind of go back. Then it goes back to Scurry. We need this and this and this and this and this. Please get it to us like tomorrow, like yesterday. And then you get that back to us. We get that back to the underwriter. And then at that point, hopefully the underwriter's saying, yep, okay, I have everything I need. Every once in a while, you bring them one thing and that opens up another door. It stinks, but sometimes it happens. So you present them with this new piece of documentation and they review it and they go, oh, well, now that I saw that, I've got more questions for you. It can happen, guys. This is where people get really frustrated. And this is where people say, I hate this. This is where people say, this isn't fun. And you've already asked me for that. We usually don't ask for things twice, but right, there's things. Once you present something, new things can unfold, okay? So again, I promise you, if you have been watching this whole course, watching all these videos, taking notes, and you do what I'm telling you to do, it's going to be easy breezy, and you're going to be probably in the first camp where it's, hey, it's all here. I don't need anything else. Awesome. Approved, and you're good to go, okay? But know that it might not be. Know that it might get conditionally approved, and you need more things. Those are called STIPs or conditions, and those need to get cleared before it gets final approved. Then the title company and the closing department start talking and working together about getting the exact final numbers so you know to the penny what you have to bring to closing. I'm going to tell you right now, you're not going to know what you need to bring to closing to the penny until very close to the end. It may be the day before. Hopefully not. If you've got a great team and a smooth process, you should hopefully know days before, maybe a week before, but it's not uncommon to not know what you have to bring in until a day or 2 days before closing. So just know that. Don't sweat it. Don't stress out. You'll have a good idea. You'll know within $1,000 or $2,000, but you're not going to know the penny. Okay? It's okay. You're going to want to know, do you need to bring in a cashier's check at closing to the title company, or do you have to wire them the funds? This is something your loan officer and your title company can tell you, okay? So, and then you get the closing disclosure. So you're going to get the closing disclosure, which looks just like the loan estimate, but a little bit different. It might be, and you're going to compare the two. Hey, you said my origination fees were going to be here, and it should be the same or lower. It should not be higher. You said my prepaid expenses were here, and you should be within roughly 10% or less. You said my escrows and my other costs were here. Those can fluctuate a little bit because there's different factors, how many months they need to collect worth of insurance and taxes. But then you get your closing disclosure to match with your loan estimate, and that'll tell you, here's your cash to close, here's what we're going to need, here's your final rate that you have now locked in at, because you did lock in at some point in this process, whether it was right away or typically before you come out of underwriting. Underwriters need to see you're locked in, okay? So that's going to happen at least by that point. But then you get your final numbers. You know what you have to bring for cash to close, and you know the date, and then you're ready. And can you believe it? You have made it. You've survived the mortgage process, and you are ready to close. So again, it's like the DMV. It's like the dentist. It's not a ton of fun. No one gets pumped for all this, but you are going to be in such a good position because you are following this, because you're so much smarter than everyone else out there who is just trying to figure it out and hope that they have a good loan officer that knows what they're doing and telling the right steps and communicating with them, and hope they have a good agent that's telling these things. You already know these things. You are set up for success, guys. So that's it. That's the whole process. I know this is a really long video, but that's the whole process kind of from start to finish, okay? Of course, there's a lot of things that are happening in the middle with your agent, with your realtor, doing the home inspection. You're going to do that right away. You're going to do the home inspection probably, before you put the offer in or after you put the offer in. You have an inspection contingency period, so you may have 3 days, 5 days, 7 days that you're going to go in and do that, and your agent's going to help you with that. And you have some other paperwork with your agent as far as maybe addendums and amendments that you're making changes to the purchase agreement. But that's really it, guys. This is pretty much encompasses the whole thing. So from A to B, A to Z, from day 1 to day 30, this is really all of it right here.